Hello, what's happening, people? So it's been a while since I've done a recording. As some of you or all of you may be aware, I've moved out of my car into some accommodation with the cold and wet weather and the shorter days. It's been a bit grim, to be fair. So I've moved into some accommodation for the time being. So what I wanted to do is just break myself back into it gently with a quick trade recap. And I'm going to do a quick trade recap for today, which is the Wednesday, the 16th of November, and the trade analysis is on the US 500 as always. So we've got this three drives pattern where we've actually taken the liquidity down at the bottom, 1, 2, and then 3 here, and at the end of last week, we actually finished this with a really strong bullish engulfing candle, but we've actually traded into the mean threshold of this bearish order block. So if I first and foremost draw in that using my parallel channel, so you can see how these levels are really well respected. So we've actually broke up into that, and we had fallen just short of the mean threshold, and we were starting to stall basically within this region. And then yesterday we had a big push to the upside, which was basically a fake out, and then we've come back below that mean threshold, which is also around the key figure of 4,000 on the dot. So I started my analysis with this in mind. Now, overall, I am anticipating that this is going to hopefully reverse here in and around this region. Obviously, we need confirmation on the weekly with a swing high to trade lower, but we're back into a premium with this down leg here. So we've grabbed the sell side liquidity and then we're trading back up. And then this is actually a premium weekly PD array in the form of a bearish order block. And what I don't like, to be honest, is the fact that this actually looks like a bullish order block. So we could be capping price here on the weekly, but overall I am favouring the downtrend to continue due to the economic crisis that everybody's in. So we're painting a narrative now. So we've got this as a downside objective on the weekly time frame if we see a weekly swing high, and then coming back lower on the daily time frame, we've actually got this daily fair value gap. So the draw on liquidity, as we were capping price here, I was anticipating technically the right shoulder or candle 3 of the 1, 2, 3 swing pattern. I was anticipating that here, so it was more of an aggressive entry than I'm used to. However, we've got that there on the daily. In fact, I'll label that daily bullish fair value gap. However, we've actually got the sell side liquidity of the previous daily lows as well. So let's label this in. And then PDL here, which is sell side liquidity, but that's previous daily low. So we've got this for targets. And then going down to the 1 hour time frame, you can see basically that we've got these patterns going up, and all the time when people are selling short here, we've got a run on the liquidity, and this is where smart money will be looking to enter short in the liquidity from the dumb money, so to speak, which I was actually included in, and I'll show you that in a second. And then we've got another move higher with this really big convincing move down, and then we've got a grind up, and we've punched through into that sell side liquidity, into the mean threshold, come back down to trade below. And then this is, it's not very convincing, but this does actually look like it could be a break of structure or a market structure shift. However, when we are considering advanced market structure on the 1 hour time frame, to give us that daily swing high, what we are looking at doing is having basically 3 peaks. So it's a head and shoulders pattern, but the advanced element, as ICT teaches it, is you've got a short-term swing high here, which is 1, 2, 3 swing high. You've got another short-term swing high here, which is 1, 2, 3. However, when we are trading back up into this bearish order block and rejection block here. This is also a breakout on the lower time frame, which I'll show you in a second. Let me just get this on white. So that's PD array. So I was seeing this here, and today I was actually a little bit early down on this candle here because I'd anticipated short-term high. This was initially a short-term high, but however, when I saw that we were trading back up into this region here, which was back into a premium on the 1 hour time frame, as soon as we got that 1, 2, 3 swing here, I had an aggressive entry on this candle. However, what we did is we actually spiked up into that to take out the sell stops, buy stops, sorry, for the buy side liquidity to then move down, and we've actually paired it with the previous session lows. So when we are going into this, so I'd actually entered in this here, so it was a little bit premature. We hadn't actually got a market reversal on the 15-minute time frame. However, we did on the 5-minute and below, and we were actually printing some fair value gaps to the downside. So I will enable executions. So you can see here, so I actually sold it here on the lower time frame, and then I ended up buying it back at a loss. This was where my stop loss was, above the fair value gap, which made sense on the lower time frame. So you can see just there. So it stopped me out, and then we had the full confirmation. And then when I saw this unfolding, I'd got this as the draw on liquidity, and this one here. So what I want to do is market sessions. So you won't be able to read it, but this box here, in fact, hide all this. So this box here is the Asian trading range. So we've got the Asian lows here, which is what I was targeting. We've got a failure swing high with full confirmation traded below. Then we'd actually got this this structure here, which actually printed a bearish order block on the 15-minute time frame. So there's your institutional order flow. Now my entry was on this candle just here. So when I saw that we traded below, we'd actually taken the sell side liquidity here. Okay, so everybody that's been long here, they roll their stops to here. Okay, and then anybody that's short would be rolling their stops as they come down below. So when I saw this low test candle here, and then price failed to push higher, and I was watching it at the time that it was happening, and as soon as we actually started to trade lower on this candle, this is what gave me confirmation on the lower time frames, the fair value gap entry. I entered at market, and stop was nice and safe, and then we pushed lower. So I didn't actually get filled due to the spreads on this candle here. Look, you see the exit is just above. So we actually came down and the spread widened. So I exited manually. So it's just slightly off the low with that candle. So down to the 5-minute time frame. So you can see here, so as soon as New York opened, we've got the immediate short-term high for the run-on buy-side liquidity. So we'd already got the narrative that we'd taken the liquidity from here, which is what I got stopped out on the first one up here. And then during the news announcement, we'd actually traded lower. We'd suckered in all of the earlier traders. So what this does is it induces liquidity. So everybody sees the run down on this move from the news announcement, and they're entering their positions, and they think it's dropping to the floor's dropping out of it. And then this is the manipulation. So as soon as I saw the manipulation on this candle here, this is where I took my entry. So my entry was, it was a good entry, so it's just up here. And excuse me, if I can find it. So where we'd actually got this big strong candle up, I actually entered as an advanced entry on like during the formation of this order block here. And then as soon as we'd actually traded below, that's where I took my entry, and then my exit was just here. So overall, really pleased with that. And here is just a quick preview of some of the other losing trades. So sold here, and then sold there, and then so I basically, what I did was I actually rolled my stop to just over break even, and then it stopped me out, and then I sold here, and I walked away from the charts, and we actually went quite well in the direction of my trade. However, it stopped me out on this candle here. Basically what I did is I set it, and I was targeting these lows here. So again, I was wrong here. This was actually a reduced trade size based off of the entry type that would already come back down, and we were looming quite low to this low. So I entered a smaller entry position size for this entry, and then it stopped me out here, and then this is where we'd actually traded higher. So initially, if I show you the 15-minute time frame, so where I was actually playing this trade here, we'd actually come back into to close this range, and then I'd actually, there were two fair value gaps on the 5-minute time frame, I think. Probably they're all closed in now. Yeah. So we'd actually traded up into two areas, but we'd actually gone into the higher objective, which was actually up here. So that's just a quick recap. Keep it nice and short. The idea that I've actually got in my mind now is we're actually going to come down to tap into this daily fair value gap. This is what the drawn liquidity is. So you've got the previous daily low here, and then beneath that you've actually got the discount PD array. So this is what I have in mind. There was an afternoon trade here as well, so just bring this on. So we've had a run up to snap out some of the sort of weaker hands again, and we've actually gone back up to the weekly open, and today being Wednesday, I actually see this to be the high of the week. So I'm anticipating now, geez, that looks nice. A second. So I'm anticipating price to come down a little bit further, and this is actually potentially going to be the high of a weekly swing high. At least that's what I'm hoping, because I cashed out some or all of the like ISA investments that I have in the S&P, because I was making some changes, but no sooner did I actually cash out of them than we've actually had a bounce. So at the moment, this is higher than what I'd previously sold them at. So I'm a bit disappointed, but overall, I'm aiming for this level, which is the 3400 level, as ICT outlined. So if we get down to here with another continuation, then I will be going in heavy with long-term investments at that level. So hopefully you found some interest in that, and please give me some feedback in the comments. And if this is the first video that you are watching, please make sure that you like and subscribe and all of that other funky stuff. And until next time, I'll speak to you soon.